Hey guys, it's Lance Hulsey, California broker, and today we're going to go into detail about real estate and the real estate process. More specifically, this is the largest financial transaction you'll probably ever be involved in your life, and it's amazing to me how few people actually understand real estate and the process. So I'm gonna wing it today. I've got some cheat sheets here, and by the end of this video, you're gonna know what exactly real estate actually is and the different types. We're gonna talk about the buying and selling process, who the key players are in this process. It's not just the real estate agent or the lender. Common terms like mortgage, escrow, appraisal, and equity. The cost that you'll face is not just the down payment, and the basics of investing and building wealth if you're interested in that aspect of it. So I hope you stick around. I think this is going to be a really great video. I'm really looking forward to it. Let's just jump right in. What is real estate? Real estate is the land and anything permanently attached to it. So, for instance, a building, a garage, any kind of structure is real property. So real property or real estate is the structure and the land. Personal property is the stuff within the structure. Funny enough, real property is also orchard trees, but personal property is the fruit on the trees. Just a little side. All right, so real property, the land and the physical stuff attached to it. Personal property, stuff that can be moved like furniture, TV appliances, unless they're built in, and stuff like that. So think of personal property as movable items and real property as stationary items. Types of real estate. So we're not going to really get into commercial, but let's just talk about it. So residential real estate is single family homes, condos, townhouses, duplexes, anything 1 to 4 units. Commercial property is used for businesses, so it's like offices, retail center, restaurants. Commercial property lending also starts at 5 units or above. So if you had a 5-unit property that was residential, you'll probably have to go to commercial lending. Industrial is warehouses, manufacturing, distribution centers, things like that. Land is the raw land, lots, farms. Sometimes it can be land with developmental potential. They consider that raw land as well, though not to get into the weeds here, but investment grade land often has encumbrances or utilities and things like that that are associated with the land. So next is how real estate value works. So number one rule of real estate knows that the number one rule of real estate is location, location, location. So the number one value driver is location. Think about a 5-bedroom house with a pool overlooking a great view of the ocean, but one of them is in upstate California along the coast versus, say, Pacific Palisades. Obviously, Pacific Palisades is a better location to some, and so it's going to drive a higher value. So location, location, location. And that means schools, the commute time, the neighborhood vibe, walkability, things like that. So those are all factors that you should factor into location when you're looking to buy a house. You obviously want good schools if you're going to have children in the schools. It's also good just for resale value, even if you don't have children. You want to make sure that you can walk places, maybe downtown, if you're close to a city center, things like that. Condition and upgrades. That's the roof, the HVAC, which is heating, ventilation, and AC. That's the HVAC term you may have heard. Kitchen, bathrooms, and the layout. So those are all things that have to do with condition. Size and features are terms like square footage, lot size, bedroom count, parking, how much parking is available, and views and things like that. So then there's supply and demand. Supply and demand is a term that you might hear. If there is more supply, then it's usually a buyer's market. If there's less supply, then it's a seller's market. So those are a couple of terms that you may want to grasp. If it's a buyer's market, the buyers usually can dictate better terms for their purchase agreements. If it's a seller's market, more than likely you're going to have multiple buyers going after that same property. So you might have to drive the price up or offer concessions and things like that. Comparable sales, or comps, as we call them in the real estate industry. This is a huge one. So appraisers and agents and lenders often look at recently sold home nearby that are comparable homes. That's the comp, comparable homes. So you're not going to look at an apartment building to get the value on a 4-bedroom residential property. You want to look at 3, 4, and 5-bedroom houses and try to do a comparison. It's best that you compare apples to apples. So a 3-bedroom, 2-bath house to a 3-bedroom, 2-bath house in that same neighborhood. So that's what comparables are. All right, next is the home buying process. And I know I'm going fast through this. We can get into details if you want to make a comment. We can go into much more specifics, or I'll answer your questions in the comments if you have specific questions, all right? So the home buying process step by step. So first thing you got to do, and I've had videos on this if you've watched this channel, is get pre-approved, not pre-qualified. Get pre-approved. Before shopping seriously, you get pre-approved. That's when the lender reviews your income, your credit, your debt, and the estimates on how much you can borrow. They usually give you a letter. So that's the pre-approval letter. Pre-approval is not pre-qualification. Pre-qualification is merely a quick estimate of your borrowing power. They don't usually do a credit pull or anything like that. Do know this, a pre-approval will usually do a hard credit check. So if you're concerned about that, talk to your lender, all right? So next is you got to meet with a lender, a real estate agent. Pick your real estate agent. If you need help with that, I have agents all over the country that I refer business to. So send me a private message or something about the area you're looking for an agent in, and I can help you out. Choose your must-haves. So what are your needs? So your needs might be the number of bedrooms or your commute time or the school district. Those are needs. And then wants are like pools or granite countertops in the kitchen or a view. Those are things that maybe you can live without. They're not quite needs, but they're not like, wish list. They could be wants, which is a little bit higher than a wish. Because in real life, you rarely get 100% of what you want anyway, because no house is that perfect. I've been doing this for 20 years, and I've never, ever had a client walk into a house and say, oh my God, this is the most perfect house. There's nothing I want to change. I take that back. There was one. There was one house one time where a buyer said that. All right. Step 3 is you start touring homes with your agent, going to open houses, and then you make the offer. So within the offer, you have the price, the closing date, the contingencies, earnest money deposit, and requests like credits, repairs, and things like that. So let me just quickly go over contingencies. Contingencies in a contract in California are usually a loan contingency, appraisal contingency, and a physical contingency, which has to do with inspections of the property. We also have insurance contingencies here in California. There's also title contingencies to make sure that there's nothing wrong with the title. So all those things your agent can walk you through. Earnest money deposit is also called the initial deposit. That's the percentage you have to put down with your offer within 3 business days usually. And that comes out of your total down payment. So if you're putting 20% down, you might put 1 to 3% down within the first 3 days of getting your offer accepted as the initial deposit. And then you are left, let's say you put 3% down, you're left with 17% more. That equals that 20%. If you have an FHA loan, it might be 3.5 to 5% down. If you have a VA loan, it might be no percent down. So if you're a veteran, thank you for your service, and you get the benefit of 0% down. Oh, I already talked about contingencies. Inspections. That's part of the physical contingency, and you usually want to inspect for safety issues, big ticket repair items, hidden problems. That's a big one. If you accept as is, make sure that you have that conversation with your real estate agent, because waiving any physical contingencies is a big deal, and you better have a clear understanding of the condition of the property before you do that. You can request repairs in most contracts. You can request credits from the seller in most contracts. You can renegotiate the price after you've gotten into contract if you find something that wasn't disclosed. If your physical contingency is still in place, you can walk away as long as you haven't removed that contingency. And usually it's not an issue getting your deposit back, if you had put that 1% to 3% down. All right, appraisal and underwriting. So the lender orders the appraisal. The agent does not order the appraisal. The lender orders that. You have a right to see that appraisal when it comes in. You also, in California, and I'm only going to speak to California here, you do not have to share the appraisal with the other side unless you're using the appraisal to negotiate because the appraisal came in under value or something. Then you're going to want to share it to show that the value came in under the value you might have put into contract. Otherwise, if it comes in at asking or over your contract price, you have no obligation to share it, at least here in California. The agent will usually meet the appraiser at the property and walk them through comps in the area so that they have an understanding and might not have missed a comp that, they do their own due diligence, but it's always good to have the agent have a conversation with the appraiser. Next is title, escrow, and closing. So title confirms that the seller has a legal right to sell the house, and there are no surprises with claims or tax liens and things like that. So escrow is a neutral party that helps handle the money and the paperwork. Now in California, in Northern California, title and escrow are combined. It's the same group of people. Southern California, title and escrow are different entities. So I'm not sure how it works in other parts of the state. I know Massachusetts, you have attorneys involved. The agent is involved in the contract, and then attorneys help with the escrow and title. I think that's the same in Texas, and every state's going to be different because every state has different contracts and different processes. But they should all be working with title and escrow at some point in the process. So that doesn't necessarily change state by state. So when you get to the closing table, you sign the final documents, you wire funds, and you've got to be really careful about wiring funds. Make sure that any wiring instructions that you get, you verify with your agent and your escrow company that you're wiring the money to the correct bank accounts, and double, triple check that stuff, because wire fraud is a thing in real estate, and people are constantly trying to get you to wire money places that it shouldn't go. So be very careful and double, triple check the wiring instructions with your agent and with your escrow officer, who you will know. Then once all that's done and it funds by the bank, you close and you get the keys. Hooray, congratulations, you are now a homeowner. So that's the buying process. Now with the selling process, some basics there are pricing strategy, prepping the property, marketing, photo videos, listing descriptions, open houses, online exposure, offers and negotiations. Look beyond the price, the timeline, the contingencies. Your listing agent will go through any offers with you and try to compare offer to offer so that you can see the kind of apples to apples of what one offer is versus another if you're fortunate enough to get multiple offers. There's an escrow period when you're listing the property, just like the buying side. The buyer has the right to do those inspections, appraisal, and get their loan approved and funded. And then there's the closing. At closing, they pay off any liens, any back taxes, they transfer title, and then you hand the keys off to the buyer. So that's pretty much the listing side of things. I simplified it, obviously. There's a lot of prep that goes into listings, but that's the process, usually from the from the seller side. Real estate financing, let's talk quick about that. So mortgages simplified. So California, we call it mortgages. It's become kind of the term like Kleenex, even though it might not be, it's tissue. So, or foil, it can be called Reynolds wrap or whatever it's called. So mortgage is a term that's mostly an East Coast term. Out in California, we have what's called deed of trust. So you have a trustee that's a middleman. They hold that deed until you pay off the loan. That is not a mortgage, though we call it mortgages here in California. So just so you know, it's a little bit of a difficult thing to understand, but let's just use the term mortgages for the sake of argument. So your payment will include what's called PITI, principal, which is the loan balance, interest, the cost of the borrowing of the loan, taxes, and insurance. Now, in the interest and the principal, there also may be points. So a point usually is like a percentage or a fractional percentage that the lender will charge you to get a lower rate or something. So if you ever hear of a point of like 1 point, that's 1% of the loan amount. So if you're going to borrow $500,000, 1% would be a $5,000 point. You would pay that. Good news is most often points are deductible for tax purposes. So talk with your CPA about that. Also, any closing costs are usually deductible. That includes commissions you pay the real estate agents, etc. So down payments. So you have conventional, which is somewhere between 3 and 20% down. This is, I mentioned FHA, and then conventional is just like a Bank of America or any big lender. I'm sorry, I misspoke. FHA is often a lower down payment, and that's the Federal Housing Authority, I think is what FHA stands for. They have often lower down payments, but you'll have to pay PMI, which is private mortgage insurance. A VA is for veterans, and it's sometimes 0% down, like I mentioned before. And then there's USDA loans. Most people don't realize that the USDA, U.S. Department of Agriculture, actually has loans. And here in my area, we have a county, Santa Cruz County, which is basically an agricultural county right on the ocean. So you can get USDA loans for cheap. And they often have zero down payment loans as well. So if you're in California and you're listening to this, there are some great loan packages. I can connect you with some great lenders, so just let me know. Interest rates. Right now, interest rates are about 6.1 something. As I speak in March of 2026, interest loans our interest is about 6.14 to 6.25 for conventional loans. Interest rates fluctuate daily, so we won't get into how much interest rates are. Just know that they affect the borrowing power that you have. So the higher the interest rate, usually the lower the borrowing power you have. So when interest rates are lower, you can buy more house. And when interest rates are higher, you can't buy as expensive of a house. When interest rates are at 3%, you might have qualified for $1 million house, but at 6%, you might only qualify for a $750,000 house. I'm speaking California terms here. I know that a lot of the country, it's a lot different. So just, do comparisons of different interest rates. And when you work with a lender, they will go through all this with you, and they usually have spreadsheets and stuff like that. So you can do comparisons. And really, a little side note, as a buyer, make sure that you're budgeting for your monthly payment and don't get fixated on interest rates and costs to borrow. Focus on what's your monthly payment going to be, because that's the reality and the real world number that you should be budgeting for. So, focusing on the interest rate alone is going to get you stopped in your tracks before you even get to the exciting process of looking for homes. So work off of a budget, not just off the interest rate. All right. Costs everyone forgets. And I've alluded to this a couple of times, but if you're a seller, I often, as a listing agent, recommend my sellers do the inspections up front. You also have moving costs as a seller and as a buyer. Buyers also have the appraisal, which they're going to pay for in their loan. Appraisals can be anywhere from $500 to $1,500 or more, depending on the size of the house. So talk with your lender about the appraisal costs. Closing costs. These are lender and title and escrow costs. So your lender is going to charge you a fee. Title and escrow is going to charge you fees. Moving costs, I mentioned already. Any immediate repairs or upgrades, you're going to want to deal with that. So that's on the purchase side. You also have property taxes that are going to come due. And in California, we have supplemental taxes that can come 18 months after the sale. So talk to your agent or your escrow and title company about that. You have maintenance costs that are going to be ongoing. If you're buying in an HOA, there's two things to note about HOAs. One is whatever the HOA fee is, your lender most likely will add that as an expense to you, even though you haven't bought the house yet. So if you're going to buy a house with a $500 a month HOA fee, they're going to factor that into your debt so that they know you can afford the HOA fee. Think of HOA dues as prepaying for future issues. If you look at it that way, it's not so painful when you're paying for HOA fees. And then there's utilities and things like cable and internet and things like that. All right, some key terms that we'll go over again. Equity is the portion of the home that you truly own. So if you put 20% down on let's just use a rough number of $1 million. If you put 20% down, that's $200,000. The day that you get the keys to the house, theoretically, you have $200,000 worth of equity because you put your own $200,000 in, and the bank you owe $800,000 to. As you pay that bank loan down, your equity grows and goes up. All right. Appraisal. That's the professional value opinion, and that's for the lender. Comps. That's recent sales in the area that you use to estimate the value of your property. Escrow is the neutral process of holding funds and documents to get to the closing. Title is the legal ownership record. The title company makes sure that there's no clouds on title, which is a term I haven't used yet. That could be that, maybe there's a long lost relative that has some ownership stake, but nobody can find them. Well, they wouldn't be able to close title until they find that person or an heir to that person to clear that off of title. Contingencies are your contract protection clauses. HOA is your community association dues. Real estate investing basics. We'll just go over this pretty quickly here since this is a long video, but popular terms for real estate investors are appreciation, which is the value that grows over time. Cash flow, which is your rent minus expenses. Loan pay down is where you get the tenants to help pay your mortgage. And then there are tax benefits, and that varies based on the type of property you have and how you're treating it as an investment property. You should talk to your tax professional. Don't trust your agent to give you tax advice. Talk to a tax professional or a tax attorney. Some beginner investment paths for those of you that are kind of interested in this. So house hacking, where you live in one side, you might rent a bedroom, or if it's a duplex, you rent one side, you live in one side. Long-term rentals is where you put a tenant in for a long period of time, more than 30 days. Short-term rentals are usually 30 days or less, or it could be the Airbnbs and things like that. Flipping is a high-risk and more active process where you buy the house hopefully below a market value, a future market value, you repair it, and you sell it for a profit. And then you might have heard the term REIT, R-E-I-T, that's real estate investment trusts. Those are very passive, and they're kind of like stocks. You invest in a trust, and you don't have any active management of that trust. You just reap the rewards if they are paying out dividends and rewards. All right, so wealth levers: appreciation, cash flow, pay down, and tax strategy. That is your fastest way to wealth. Real estate is a great wealth builder, much more safe, I feel, and this is my personal opinion, not a legal opinion, than stock market. Real estate is the only asset where you can put 20% down and control 100% of the asset. Think about that. If you buy $5,000 worth of stock, you've got $5,000 worth of stock. If you put 20% down on $1 million home, you control $1 million home for $200,000. and you get the benefit of all the appreciation over time. The bank may loan you $800,000, but they don't get a piece of the appreciation over time. That's the equity we talked about. All right, some common mistakes that I see. Shopping without a pre-approval letter. Don't do it. Focusing only on the home and not the location. Double check where this house is when you're laying in bed on Sunday and you're on Zillow. Please. There's a thing called greatneighborhoods.com, I think, or greatneighborhoods.org, and it will tell you everything about that neighborhood. Do more than just look for a house. Don't ignore inspection findings. Don't stretch your budget and become house poor. Don't forget the long-term costs and maintenance of your property. It's not just the cost to get into the property. Don't skip out on negotiations out of fear of making the other side cry. Make sure you understand the contract timelines. Work with your real estate agent on that. All right, that's pretty much it. If you've made it this far in the video, congratulations. I applaud you. I know that this was a lot and we went through a lot. So if you have any questions, please leave comments. If you are watching this video and you're not following me, please like, subscribe, comment, thumbs up, bell, whatever all the things are you can do. I keep making these videos because I like to give real advice. I don't have a lot of production value. It's not a lot of fluff. It's just me talking to you. And I hope these are valuable. I've been doing this for 20 years, so this is real world experience. So again, thank you guys for your time. I know this was a lot. If you have any questions, let me know. In the meantime, I hope you guys have a fantastic day and good luck out there in the real estate world. It's an exciting industry and everybody should be able to afford homes. I think that's one thing that we lose sight of. So if anybody has any questions, please let me know. In the meantime, see you guys later. Bye-bye.